Hello and welcome to CryptoWeeklies or Josh Forecasts Crypto. This is the 400th video on our channel. Today we'll be covering Ethereum and its AI-based forecast as well as several indicators. Before we do that, we'll focus some attention over the last 24 hours worth of crypto related indicators and what has happened in the market. The focus of the channel is certainly AI based forecast. None of the content is financial advice, but we also employ data science based techniques and indicator to analyze the content or the sentiment related to crypto. First, we'll go with our crypto TLDR machine learning based model, which classifies the news related to crypto and buckets them into bullish, bearish, or neutral. Over the last 24 hours, most of the crypto news are bullish, most related to SHIB as well as I think Solana and then Doge, mostly related to memes as well as Eigen, and then Ripple's partnership with SBI Group and Jupiter Dex, which is related to Solana, Shiba Inu, and then one related to another one related to Sheeb and Doge. So those are the narratives. All of the content is available for free on the website. The link is on the bottom of your screen. Now let's look at the peak value, which is a composite risk metric that we have updated. We update every 24 hours on our channel. We look at the crypto market, that is the top 100 cryptos by market cap, and look at their price in terms of how much volatility, alpha, beta, as well as Sharpe ratio and percent drawdown, and provide a holistic view of the risk return profile at any point in time. The higher the risk score on the y-axis, that means we are closer to a peak. The lower the risk on the y-axis, it is closer to a valley. We are closer to a valley at any point in time. And also this is referenced with the color codes. So at during peak the color codes are dark red in color, whereas in during the valley phases the color codes, that is when the risk score is below zero point 0.1 threshold, the color code is at green. So where are we right now? So ever since February 2024, we are in orange color, which is the intermediate risk, not the risk at peak level, that is at around 0.5 or zero point 0.6, when risk score is about that threshold. And that is a topping related risk score, is at least historically speaking. Now especially that March, when March of 2024 got over, in April, the risk scores or risk levels have gone down from 0.35 level to about 0.26 level. When and if the risk falls below this zero point 0.2 threshold, then the color shifts from orange to yellow, and that, uh, personally speaking, that has been a good time to scale into the market personally, and um, the most of the benefits that the market offers are during the when the risk score is below this 0.1. So in terms of the risk return profile, we are not close to the peak, but not also close to the valley. The trend is that the risk scores are going down, at least since since April began. So we'll keep a close eye on this risk score and update you once this risk goes down to between zero point 0.1 and zero point 0.2 threshold. That's when, personally speaking, not financial advice, uh, dollar cost averaging has been helpful for me. Um, and the other, on the other end of the spectrum, is whenever I DC at peaks, that's when I lost most of my money. So at least historically speaking. So that's something that I wanted to share. Now going to the risk meters, this is the earlier approach was top 100 cryptos in one single snapshot. This is one crypto at a time, looking at their price behavior since 2018. So almost six and a half years worth of data, and a composite risk score for the cryptos which have been around for the last 6 years, and how much they are away from their potential peak, and what is the risk return profile for one crypto at a time. Bitcoin is certainly one of the lowest risk plays at when with a risk score less than zero point 0.4. in the neutral territory. Ether, today's crypto that we're going to discuss, is at around 0.5 risk score, and you get the idea. You can check out uh, all the risk scores for the top cryptos, at least the ones which have been around for 6 years, um, or more, and check where they land on their own risk journey using this composite individual risk or risk meter tab that we have on our website. Looking at the narrative cloud, which is again our machine learning model trained for on natural language processing related data, looks at the popular narratives over the last 7 days, and based on how the frequency of that narrative repeating over YouTube and X, the size of the narrative is determined. So the largest narrative right now is Bitcoin, followed by crypto, and and altcoins, and one of the larger ones over here is Ethereum, the crypto that we are going to discuss over today over the course of this video. And you can see that the presence of a narrative on this narrative wall speaks volumes of if the if there is some narratives, or if there is some discussions going on related to that crypto. Another narratives famous right now are some of the major altcoins such as Cardano. I saw Hedera over here. I see Solana, HBAR, and then regulations related to stablecoin. Halving was a major narrative a couple of days ago. Now this size of this halving narrative has waned as Bitcoin's halving got over the last 10 to 15 days, 10 to 12 days ago. And now looking at the next indicator on our screen is the heat map, which looks at the firstly it looks at the crypto of the day today, looking at the last 24 7 days, 30 days, and 90 days performance. SHIB is the crypto of the day with an overall score of positive 31. In terms of some of the decent performers of the last 24 hours are AVAX, Link, and XRP. Over the last 7 days, ETH, although it has gone down by about 1.5%. It has not gone down as much as the rest of the cryptos. ETH is down by only 1.5%, whereas there are cryptos which are down by about as much as 34%. Bitcoin over here is in the middle of the pack at around negative 5%. Last 30 days performance, Bitcoin leads at around, Aptos leads at 4.5% growth. Bitcoin is down by about 11.5%. ETH is down by about 12 to 13%. So not too dissimilar growth between returns between Bitcoin and ETH. Over the last 90 days as well, Bitcoin is up by about 47%. ETH is up by about 38-39%. So that's the performance and relative performance. And then in terms of portfolio builder, this updates also every single indicator updates once every day. This is the conservative crypto portfolio. Over here, allocations based on historical returns. This is again not financial advice. A portfolio with 22% BTC and about 12% ETH is recommended by our stats and AI based portfolio or allocator. And similarly, if you are interested in mid caps, and these are the allocations, because over in the mid caps what tends to happen is one of them blows up to the upside, whereas the rest blow up to the downside, so diminish and shrink. So if you are interested in checking these portfolios out and also toggling between some of the names that you like or don't like, so for example I'm just randomly clicking few names over here, and if you want to include them or exclude them, you can use this legend on the right and make your own allocations. This is not financial advice. So now that we have covered the last 24 hours worth of activity, let's look at Ether. We'll look at it from our regression bands perspective. These are the polynomial regression bands for Ether since Ether was launched, and you can see the trend for Ether. Although there was a downturn till about 2019, the regression bands are increasing in their valuation. That means as time is progressing, Ether's valuation, or the fair value, that is the line in middle, which is the pink line, is an increasing function as time proceeds. The key idea is on the trend line, which is the line in middle, we have wrapped three standard deviation lines, regression lines to the upside and three to the downside to cover about 99% of the price action. So with three standard deviations, you get about 99% of the price action. If you are interested in slightly less accuracy but more objective or more actionable insight, you can get rid of the lower third band and upper third band, where you could get about 95% of the price actions for ether. And in for this two standard deviation approach, uh, right now the fair value of ETH is at around $2,500 $2,600, whereas the USD price, if you want to check for today, it's at around $3,035. If ether were to make its move back to one standard deviation peak like it did towards the end of or towards the beginning of March of 2024, that valuation now corresponds to at about $4,300, and two standard deviation peak for ether right now is at around $7,150. Similarly, if an equal and opposite to the rallies to the upside, if ETH were to correct any further, the fair value is at around $2,700, and one standard deviation bottom is at around $1,600, whereas two standard deviation bottom is around $1,000. So those are the key levels for Ether to watch in terms of if it's overvalued or undervalued. The way these polynomial regression charts are calculated, a polynomial function is wrapped around the price action, and residuals are multiplied with adding and subtracting one standard deviation from the trend line respectively, and that's how the bands are calculated. And the purpose or the utility of this regression analysis is to identify potential buying or selling opportunities based on deviation from the trend line being the line in pink, and these boundaries represent if Ethereum's price is overvalued or undervalued with respect to the trend line. And we tried to attempt to do a two standard deviation extrapolation of this two standard deviation behavior for ETH trend line behavior. We accommodated for some of the downturns as well as some of the upswings for ETH, and tried to extrapolate Ethereum's regression band to about 2030, late 2030. And at that point, if the past behavior, if that is any indication, the two standard deviation peak, which at this point is at around $7,000, at that point would be at around somewhere between $9,000 and $10,000 for Ether. So this is the benefit of extrapolating it. It does not mean that at 2030 the regression bands would coincide this exact valuation, but if historical price behavior is any indication, that those would be some of the key levels to watch. So now with this regression approach done, now we will do our crypto eval using our MVRV Z-score based approach. This is the weekly Ether's price action in blue. Right now the price action you can check as late as April 29th, that is today's or the last week close at around $3,040. And the other line is over here is the red line, which is the MVRV Z-score, which calculates the market value as well as realized value of an asset, and divides it by a standard deviation of the market value. And that's how the z-scores are calculated. The formula is on the bottom of your screen, and the purpose is to determine if a particular asset is overvalued or undervalued using the z-score approach. If the red line is above if the red line is above the zero threshold, that means at least from an MVR z-score the asset is overvalued, which is the case for Ether. But and if the price is or the red line is below this zero, then the asset is undervalued. The first time Ether became undervalued in this market cycle was in around June of 2022, and that was a good bottoming pattern. You can see that on the chart when the price was at around slightly around $1,000 at a weekly average level. This model had flagged Ether starting to its descent to its undervaluation stage. And for comparison, you can see the discernment for Bitcoin as well. At around similar time period, Bitcoin started to be heavily undervalued with respect to its own price action. So this is our crypto eval for today. We do have a crypto retirer model. I'll just briefly glance through it. This is our model where we determine the number of ether tokens at 8%, 15%, and 22% needed to be a ether millionaire right now at around different stages. For 2040, this number of ether tokens required to be a ether millionaire is around at 8% growth at around 800 ether tokens. If we assume 15% or the base case or realistic case growth, then the number of ether tokens needed to be a millionaire is at around 41 ether tokens. If we assume that ether would grow half at a half rate at which Bitcoin grew by over the last 10 years, Bitcoin grew at about 45%. So if we assume ether would grow at around 50% of that at around 20% or 22% compound annualized growth rate till uh, 2040, the number of ether tokens needed to be a ether millionaire or USD millionaire in terms of ETH would be at around 17 ether token. And this does not consider staking. This is a purely a flat buy and hold number of tokens needed. And in terms of USD requirement, today 315,000 USD is would at 8% growth rate, again not financial advice, would be at around 1 million in 2040. There's similar story, 122,000 at 15% and at $50,000 at 22% CAGR would reach at $1 million valuation, assuming Ether stays relevant and grows at around 22% over the next 15 to 16 years. So this is our retirement related model. And last, we'll leave with the forecast graph. This is also a machine learning based model trained on weekly price action for Ether. The model is, I think, a combination of ARIMA, LSTM, and XGBoost. And we consider the overvaluation and undervaluation phases, and then using the model draw a fair valuation line, which is the base case forecast, the line in orange, and then wrap one standard deviation confidence level bull zone and bear zone for Ether. We had trained this model in late February of 2024. The base case for our model for Ether at this point in time would be at around 2900 and 3000, and that's fairly close to the Ether's current USD price action. And if we were to extrapolate this till the end of year, the base case forecasted by our model, again not financial, is at around financial advice at around $3600. The bull case is the entire zone in the green color. The theoretical ceiling for one standard deviation bull case scenario right now is at around $4200. So if you see Ether's price action going to that level, this would correspond to a one standard deviation peak and have some resistance over there. And if we were to draw this line to about end of December 2024, a theoretical ceiling or a forecast for a bullish case forecast for Ether for the remainder of this year is between $4,000 and $7,600 forecasted by our AI model trend on price action till February. And equal and opposite is if Ether or the wider crypto market were to have a significant pullback, the bear case for Ether is between 1500 USD till about 2000 USD forecasted by our model. So I'll leave with this. I'll just briefly summarize whatever we discussed. The base case for Ether is between 3K and 3600. The bull case between 4200 and 7500, 600 territory. The bear case between 1500 and 2000. In terms of whether it is a potential retirement vehicle, the number of Ether token at the bull case is required are around 17. At base case are required to be a ETH million is around 41. In a bear case at around 100 or 105 Ether tokens without staking. In terms of whether it is overvalued or undervalued, in terms of MVRV based approach, it is overvalued by about 0.38 z score. And then in terms of the regression band approach, the key levels to watch are at around $2,700 at a fair value trend line, and then to the 1 standard deviation peak forecasted, so not forecasted, analyzed by our regression band analysis is around 4400. The 2 standard deviation peak is at around 7150. So this is all of our analysis related to Ether. If you like this content, please subscribe to the channel, also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.